The S&P 500 broke 4,600, but is it enough? Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on YouTube or on the replay and you haven't done so, then you get down there and you smash that like and subscribe button. Click the bell icon next to it to get notified every time we upload a new video here on the channel, because you're not going to want to miss what we have to show you here this week and every other week as we close out 2023. Now, last week, we ended on a rather high note. The market really pushed up high, came and tapped 4,600 and had a bit of a pullback after the close, or before the close, rather, on Friday. We started Monday off considerably lower, quite the gap down, and it looked like we were going to be pushing red in the morning, and then we mounted a massive reversal and closed the day slightly flat. After that, we didn't do much on Tuesday. Wednesday, we gapped up and we sold back right down. And then Thursday and Friday, we started creeping back up. And we did manage to breach 4,600 and close above it. I'll zoom in here a little bit for that. And so you can see we are above 4,600 here, but I would not call this a bullish push until we get another move up, if that happens on Monday. I will say it was definitely a bullish day on Friday, that's for sure. But this is not a very aggressive break of 4,600 like I'd like to see. But, let's be honest here. We are, moving up pretty steady here on the S&P 500. Obviously, our downtrend, no more. We are in a very sharp uptrend at this point. So let's get rid of this line. That line is no good anymore. So very sharp uptrend here on the S&P 500. And this is a very difficult time to trade, to be honest with you, because if you jump in now, you're chasing. That's just all there is to it. It is a chase. If you jump in here with how far extended we are from the moving averages, even from just the 50-day moving average, this is an absolute chase if you get in now. Now, that's not to say that, we won't see this continue. Even though we are essentially overbought on the S&P 500, the thing is, guys, and I've said this before and I'll keep saying it, these things can stay overbought and remain overbought for a long time. It is not a rule that once you get overbought, you have to sell off. As you can see, here we stayed overbought for quite some time. Very overbought here on this push up on the S&P 500. So, I agree, Larry. Larry said it should be a rule, and I totally agree, because we are overdue for a pullback here after this huge rally, going into December. But as we've said, December typically is a more bullish month, going into the Santa Claus rally. So we'll have to see if we get that this year as we close out 2024. But, a very hard push towards the upside here this week. If we can get more of a push and more, buying on Monday, I suspect we will see a very, green day, and we'll continue this push upwards. But if we don't, if there's hesitation and we get back down below 4,600, that is a sign that maybe we will start to see some selling, some profit taking, because this rally can only last for so long, guys. I know we've been calling for a pullback for a while. We've been very cautious with our positions, and I know that for some people, that's a little frustrating. You're like, well, why aren't you buying into this? Because I can tell you from experience, the minute you start doing that, that's when the market starts selling off. It is much better to be more, selective with our positions when the market is behaving this way. I know it feels like we're missing out, but the truth is we are protecting ourselves and we're insulating ourselves from potential downside, which is going to come eventually. Now, it may come this week, it may come next week. Heck, it may come in 2024, but I can promise you it is coming, because if the stock market just keeps going up, there's no point in buying low and selling high, because you can't ever buy low if the stock market only ever goes up. So a pullback will come back. How severe and how large that pullback is going to be is yet to be determined. And anybody who says that they know how big it's going to be is selling you a load of BS. And I've got a bridge to sell you in New York as well. So just be careful if you do take long positions, going into this rally. It could be very profitable for you. It also could be an absolute, boat anchor to your account if you go in too heavy and too hard. Not that I'm trying to give you financial advice. I'm just telling you what I would do. All right, let's take a look here at the breakdown of the S&P 500, and it should be coming as no surprise that our leaders continue to be tech, communications, and consumer discretionary. It has been for the majority of the year at this point, and these obviously are the bigger gainers moving in, with this rally that we saw going in on Friday. Interestingly enough, we see that financials, real estate, healthcare, energy, consumer staples, and utilities are basically flat for the entire week. So they didn't benefit really at all from this rally. So that kind of tells you where the buying was going on Friday. It was going into these growth stocks, these tech stocks. And that's great until it isn't. The minute we have a dip, in one of these, it's going to bring the market down with it. So if you're keeping an eye on a particular sector, tech would be the one that I would be looking at, because if that starts to break down, it's going to bring everything down with it. So just keep an eye on that. Be careful but obviously these are our big three winners, and you can just see how stagnated these are this week, basically just trading sideways the entire week. Let's take a look here at the asset classes real quick, and we saw a massive breakdown in oil this week. Really big pullback here back towards these lows here. Let's see, lowest we got was $69.34 per barrel on Thursday. Looks like Friday we closed at 71.23. So really hanging out in this, this 80 to 70 area. That seems to be kind of the channel that we are in right now when it comes to oil. If you want to be a little more specific, you could say 78.50, and we'll just call it 70. So we have about an $8.50 window that oil is trading in right now, and it's just kind of bouncing around between those levels. So we've talked about this. To me, this doesn't make sense at all. But, there are, factors. Obviously, they're talking about cutting production. We're going into the winter months, so we can be talking about demand destruction as well. I'm not complaining about the price at the pump, but I will say that it doesn't quite, in my opinion, make sense for what's going on a geopolitical scale as far as what's going on here. We're not going to get into the politics of anything on this webinar, but I will say there's obviously a lot going on around the world right now that surprises me that oil is still this low. We did have a massive push in gold. We have a new all-time high for gold. So let's go ahead and mark that. Looks like it's $2,071.95. Congratulations to all the gold bugs, out there who, have been calling for, gold to be the next thing. But as always, it has, at least in the past, been a hedge against inflation. Not so much this time around. All right, 2071.95. 71.95. There we go. Beautiful. We have our new all-time high on gold that we hit here. Looks like it was last week. Yeah, last Friday, if I'm not mistaken, but a very sharp, retracement. After we came up there, we had that parabolic move up, hit it, and push back down. Now, I'm not going to, go out there and draw upside down bat patterns, as Riz likes to call them. But we are getting set up for a head and shoulders pattern here. So just be aware of that. It is not a guarantee that that's what's going to happen, as always, but something just to keep an eye on, because I can kind of see it happening, here. So we'll have to see if that head and shoulders continues and does have any, push into it. But of course, when we're talking about, assets like gold, like oil, there are other things that affect the price, not just the technicals. But just something that I noticed, and I've been noticing here for the last couple of weeks with this rally in gold. So yeah, definitely something to keep an eye on. But with gold rallying so hard, does that mean that the dollar is dead? No, it is not. The dollar is alive and well, actually moving with gold for the most part. Seeing a nice big push, or not a big push, but definitely a push up after this little bit, of retracement. That's the word I'm looking for there. So we did have this slight retracement and, starting to recover a bit. We also saw the bonds yields rather start to pick back up going into Thursday and Friday. Nice little spike up. We still have this inversion where the 2-year is, has a higher yield than the 10 and the 30-year bond. That's nothing new. We've been that way for quite some time. So, we're going to probably end the year that way, to be honest with you. I would be surprised if we don't. But we'll have to keep an eye on this. Nothing too impressive to note here, except that the bond yields continue to sink, as we move into this week. And the big dates for the market this week, we have some big ones, guys, that we need to keep an eye on. Definitely Tuesday, core inflation rate and the inflation rate, month on month and year on year. That's going to be a huge catalyst on Tuesday. So be aware of that one, guys. And then we have more catalysts on Wednesday with the Fed rate decision. Now, it is expected that the Fed will not change rates. That is not a guarantee. You never know what they might do. We also have the producer price index as well, but definitely the inflation rate, the core inflation rate, two huge, dates coming up in the market here. And then we've got Powell going to talk about it, down here at the FOMC economic projections. I'm sure that'll be a great talking point for Powell is on the press conference. And retail sales month on month could be a good indicator of how Black Friday went. That would be one thing that I think would be very interesting if we don't see a big move in retail sales. And by big move, I mean big move towards the upside. Then that could definitely be viewed as a negative catalyst if sales did not go up higher than expected, or at least meet expected. And it looks like they're expecting them to go down. The forecast and the consensus are both that it's going to be negative 0.1%. So that doesn't bode well for retail, if you ask me. So definitely something to keep an eye on. But obviously the big catalyst is going to be the Fed rate decision. And then, of course, the inflation rate talking points on Tuesday. Now, I wanted to talk a little bit about a couple positions Riz got himself into this week. But before I do that, if any of our members have any questions who are here live on the webinar and they would like to post those, now is the time. All right, two huge short positions, and Riz wanted me to walk you through this trade because this is something that I used to do, guys. I used to be into the kind of the day trading thing. I got out of it because I just determined it really wasn't worth it. But I wanted to show you how it's done and how Riz does it. This first one was SERA, and there was some type of a clinical trial data that came out that looked very promising. And so everybody went nuts about this. Just so you know, this is obviously a penny stock. We are below $1 here. Let's see. We closed on Tuesday at, $2.05. Yeah, big money right there. But we had this huge run up pre-market. That's what the gray area is here, is the pre-market and post-market action. And so we had been keeping an eye on this. Riz got wind of it, decided to go ahead and get in short here, pretty close to the bell, honestly. And obviously it kind of started off well, and then it really turned against him. So instead of stopping out, Riz continued to average in. Now, this was a very difficult one to get shares to short because, again, it's a lower dollar stock. Typically, these types of stocks have very low availability when it comes to shares to borrow, because remember, when you short a stock, you first sell the stock, and then you want to buy the shares back at a higher price, or excuse me, a lower price. I misspoke there. And that's where you make the money. It's the same concept of buy low, sell high. It's just the opposite. So to do that, to be able to sell shares before you actually own them, you have to borrow them from your brokerage. And what you do is you have to trade that on leverage, which is why most brokerages will not allow you to short stocks until you qualify for leverage or for margin, as they like to call it. So you have to trade on margin. Your brokerage determines whether you have shares or not, and if you can get them, you can then sell them at a fee to your brokerage, and you can go in short. As you can see, this moved against Riz pretty quickly here. Once we hit about 10:05, these are 5-minute candles, by the way, massive rally, and that's a lot of buying pressure came in, probably a lot of day traders, to be honest with you. Came in and started pumping this thing. But did Riz give up? No, he did not. He continued to short, averaging in. He started here right around, I think it was like about 5 something, like 5.15, per share. At the end, his average was about 7.18. At the peak, he was around 7,700 in the hole. Now, I don't know about you, but there's only been one time in my career when I was ever that bad. And I have to say, I did not have the stones to hold on to it. And I just ate the loss. But Riz held on because he had conviction in the trade, and he was able to scale out. I'm proud of you, buddy, because that's something that I taught him how to do. And he was able to scale out in 2 different, chunks to guarantee some profit here. Once it started getting down below 7, He was able to start scaling out and again finish this trade at plus 4,300, which is essentially in what about $10,000 swing here. Between the two, actually, it's more than that because math on stream is hard. It's actually 12,000. There we go. I figured it out. So, a very big swing here. When you play these low float, low dollar stocks, these types of swings are very normal. But it is very difficult when you're sitting there in a position that's negative 7,700 in the hole. But if you think that's bad, just wait till you see the next one. These were both done on Wednesday. However, this one was a Wednesday and a Thursday trade. This is MLGO, Micro Algo. Sounds like a BS stock to me because it is. Look, another penny stock. Looks like we closed at $2.40 a share on Tuesday, the 5th. Some type of news came out about this, about an IPO or something along those lines. Stock started going nuts in pre-market. Riz decided to go ahead and get in short on this one. He was watching it all day while he was managing SERA. You'll note that these are both on the same day on Wednesday, and decided to go ahead and get in short here right around the $6 mark. Again, we got this late spike here right around 2 o'clock, right before power hour. When it started selling off again, Riz averaged in some more. And again, this was a very difficult one to find shares to short. And then as it spiked up here in power hour, got short again. Now, Riz decided to hold on to this. Do understand that when you borrow shares to sell or to short, there is a fee for that. For your margin, there's a margin fee. So holding shares short has a fee attached to it. So you need to make sure that these close in the green. Otherwise, not only do you have to take the loss if you do close it, you also have to pay the fees. So yay. But at this point, when the market closed, Riz was down 14 grand. So double his previous position. But look what it does post-market. This thing went absolutely nuts. And at the peak here, then the day and the night before, Riz was 32,000 in the hole on this one. Now, of course, this is unrealized losses because he hadn't closed it. But I don't know about you. Me holding through a $32,000 drawdown, that's pretty hard to swallow. But Riz was very resolute in his position. He held on to this thing. He held through the pain. And he was eventually rewarded the next day on Thursday. We had this huge sell-off. We actually had a circuit breaker halt on this security. You can see that right here. Let me circle that for you, where you have this gap down here. There was a circuit breaker halt. I believe these are about 5 minutes, basically. So this thing went on halt. It was halted because of the volatility in the stock. They will do this with these low-dollar stocks when they start going crazy, basically to stop a massive sell-off, but that's exactly what we got anyway. Now, you may be looking at this and be like, oh, he only made $375 on it. Big whoop. Well, when you come from $32,000 down, I think anything in the green is a positive win on that one. Now, of course, with hindsight being what it was, you could say, well, he could have held on and he could have got a better, close. That's true. But one thing that I learned in day trading, and is very difficult for other traders to learn just in general, is that if you close the trade green, just be happy you closed it green. I have held through some pain before in my life, and it's just happy. I'm happy to get out with like 10, 15 bucks because I was able to eke that out of the market where that money didn't exist before for me. And so when you have been, slightly traumatized by being $32,000 unrealized on a short position, and you're actually able to close it in the green and your brokerage doesn't get you for a margin call, that's a pretty big win, if you ask me, and definitely a relief off of anybody. I can tell you Riz was probably pretty happy when this thing was selling off. But even then, look at the volatility in these candles, just in these 5-minute candles, these huge swings here. Let's see. I mean, this is the high and the low is about, the low is about 980 and the high is about 1140. So math on stream hard, about $1.50, close-ish. No, about $1.60 swing just in one candle here. And when you have a large short position, I can tell you that $1.60 move represents quite a lot of profit and loss. Of course, all unrealized. But if you're sitting there watching it and you're watching your money go up and down on your unrealized gains and losses, that can be pretty difficult on the psyche. I can say that from experience because I've done it before. And sometimes when you get this sharp move down, it's hard to believe that this thing will continue to go down all day. And I think that Riz's exit here was pretty justified, if you ask me, because sometimes you just got to take your win when you can. And that's kind of the important lesson that I want to bring up here with these shorts is because, sometimes you have to be flexible in this market to, really make money. And now I don't want everybody thinking, oh, all we do is short. We don't. We do take long positions as well. And if you're in elite, you know that. You're aware of every position that Riz gets in and out of. And he even mentioned that this was an incredibly risky trade to start with. And it was. Trust me, it's incredibly risky if you're negative 32K unrealized. But it is one method that we use here in Elite that has proven itself rather profitable here for those members who can take these trades. But again, that's not to say that these are the only types of trades we take in Elite. We definitely don't. We take trades that everyone can take as well, regardless of your account size. And that's kind of what I want to talk about here, because obviously this market has been incredibly difficult to trade in with all of this whipsaw going on and this just seemingly unrelenting buying pressure that makes absolutely no sense at this point. Now, I did get some questions came in. I really appreciate that. So let's take a look here. First one came in from Sean. Do I think OXY is worth a long? Let's take a look. I need more confirmation, but I completely see your thesis here. Obviously, we had these marks before because I think we had talked about this one in the past. So, very nice bounce here off this support. This is a triple hit on support here, right around 55, 80, 89 is where I've got it marked specifically. But, we'll just say 55, 80 for a nice round number, or 55, 90, whatever you want to call it. I will say that Friday's price action is not confidence expiring. If this was a green candle, I would 100% be like, yeah, let's do it. Let's jump in. If we see more green on Monday and we kind of see it, I would like to see it push above this high here. So like above 57, that would be an area where I would potentially consider getting in because we have a pretty good risk reward setup here. You could set a stop somewhere below this 55.90 area, maybe like around, let's see if we're getting in at 57, right? I wouldn't want to let it run all the way to 55, but maybe like 55.35 or something like that could be a decent place for a stop. And then obviously our profit could be considerably higher there. So definitely a great risk reward setup on this one if we can hold. If we don't hold 55.90 or 56, whatever you want to call it, then that's a problem. But if it does, and if it starts to rally on Monday, and we start seeing that push upward, that could be a really good long position. So definitely worth considering if we start seeing some bullish price action here. We're very oversold at this point. So yeah, this one could be a very nice bounce play if it wants to go up. But that being said, don't forget what oil is doing right now. So that is a little more on the risky side if we're talking about that, but something to keep an eye on. I do like it though. More oil stocks. Jeffrey wants us to take a look at USO. Looking at USO long, I can't talk, guys. Via, you put this, but I know you meant via. Covered short puts off of support at 64.80. All right, so let's see here. So doing a short put obviously is a different type of play that some people who are on webinar may not be aware of. But yeah, I mean, you definitely have a lot of space there with the way this is going. Again, just remember with what oil is going, same issue as before with OXY. Obviously, oil has been beat down here lately. So I would just be careful on that one, but it's not a terrible play. I don't know what the premiums are on that. And how much you'd be able to pull, as far as premium is concerned with a covered short put. But if you do have it covered, that wouldn't be a huge hit to your account. If you lost it, it would be unfortunate, of course. But yeah, I mean, it's not too bad. Let's see here, 64.80. You said. Let's look at what's going on at 64.80. 80, close enough. Let's not make that red. No one can see it. Yellow, please. There we go. Okay. Yeah, I can kind of see your thesis here. Obviously, we've been here before, as they say. So, yeah, I don't think it's terrible. You definitely have more space to go up. So, yeah, not too bad. For those of you who are not familiar with short puts, you need to be taking Riz's options courses. That is a great way to do that. Link for that is down in the description of the video. Sean, another question. What level would you enter Costco? Seems to be rallying pretty hard with this market. Let's take a look. Everybody's favorite wholesaler. Oof. Yeah, you aren't kidding. This thing is going right to the moon. We are approaching, it looks like, all-time highs on this one. I am not entering this one if we are approaching all-time highs. All-time high is going to be a pretty big area of resistance, and looky there. We just bounced right off of it, didn't we? Nope. It's not perfect, but it's pretty darn close. We'll call it there, right? So somewhere around the 612 area, I would not be entering this one until we had a pullback closer to the 50, or maybe somewhere here around 600. If we find support around 600 where we had resistance before, that could be an interesting place to maybe consider a long play. But yeah, I'm not taking it long now, especially with that rejection of the all-time high. It looks like we do have a new all-time high that we hit here on Friday. So yeah, this one's running. Looks like we're overbought. We're due for a pullback. I think when that pullback happens, you're going to want to see where it goes. Let's say this thing starts to roll over on Monday and we start to come back here. Let's say we find support here around like 590 or something like that. If we hold around there, you could start to see a push up more like that. But if it doesn't, if it pulls back towards the moving averages, you'll need to, just kind of keep an eye on where it's not going to be that sharp. I apologize. That's me getting a little too click happy there. Let's try that again. So, we kind of come here on Monday and we start doing one of these, and, the moving average, of course, is going to be doing this. If we breach that moving average, that's obviously not a good sign. That's a bit of a bearish sign. So we want to keep an eye on that. But, if we find support here, around 600, which is very typical, you do see a lot of support at whole numbers, for the most part. Definitely could be a place to get in long there, but I ain't taking this thing long now. Oh, yeah, Costco earnings is next week as well. Oh, I ain't touching that with a 10-foot pole, brother. Thursday after the close, yeah, we got Costco earnings. Nope, I'm not touching that thing until after earnings. That's a lottery ticket right there. Now, it could be a very profitable lottery ticket, but with all of this buying going into earnings, it makes me kind of raise an eyebrow. Let's put it like that. All right, Jeff has been looking at Walmart as a dip buy. Still feels like a knife catch, but it's beaten down pretty hard. Let's take a look at everybody's favorite brick and mortar company. That would be the good old Sam Walton's Walmart. Let's back it out here. Yeah, we had a pretty big breach here of the 200 moving average. A very nice, strong breach here on Thursday, and then continuation on Friday. What happened? Looks like we had dividend paid out. Earnings were pretty good, but man, I guess they weren't good enough. Must have been the forecast was not so good. Excuse me there. Voice is starting to give out. So, yeah, post earnings. Okay, yeah. So, yeah, it was not good. I'm at a loss for it. It's not forecast, but I know what you're talking about. Okay, spending is a lot weaker. So they're expecting less, sales, basically. Probably Black Friday sales are not going to be so hot. So that is probably what's going to be happening here. So that'll be interesting to see, on our big dates, the retail sales. Obviously, Walmart, the biggest brick and mortar retailer in the United States. So, yeah, it's definitely a knife catch. You are not wrong on that one, Jeff. I would wait till we find some support somewhere. Excuse me. Okay, so Sean was saying they sell well during sales, but huge dips in sales pre and post sales. Yeah, that makes sense. It's Walmart. What do you expect? But they're always going to have sales. You're always going to have people going to Walmart. Heck, we got to probably make a run over there, tomorrow to be looking for a few Christmas gifts for some of the kids. So, I'll be doing my part, but I'm pretty confident that my ability to move the stock price is about zero with my purchases. So, yeah, I would be careful on this one. We need to find support somewhere first. It looks like our first real level here is going to be right around 145. So there's a lot of space between here and there, rather. So, yeah, I'd be really careful with this one, Jeff. We need to find support somewhere before I would try and get in. I mean, if you want to take a very small speculative long play, you could, but with this huge dip after earnings and a continuation here of that's not very, confidence inspiring. So I would be very careful with this one. Again, great company. I mean, obviously they're making money. I mean, look at it. You know, EPS was great. Revenue was fine. They're just projecting that they're not going to have as much revenue, you know, later. So everybody's seeing that as a negative. So that is something to be very careful of, especially in this market, because there's so much being put on, you know, what companies are going to do in the future, what they expect things to do. Guidance, that's the word. Guidance was lower. I knew I would come up with it sooner or later. Sorry, I always forget that one for some reason, but you know, the guidance seems to be having more of an impact on the stock price than the EPS, earnings per share, or even revenue at this point. So yeah, if they're expecting to be making less money coming up, obviously that's not good for the future stock price. And it looks like did we reach? Yeah, this is all-time high for Walmart basically here on the 15th of November. So yeah, that's 100% a knife catch, brother. Be very, very careful. You don't want to get cut. What are my thoughts on JP Morgan? It's a bank and it sucks. Okay, there are my thoughts. Let's look at the stock though. Yeah, looks like we've come up to resistance and we've rejected, and we're starting to try and come back up and hit it again. So very nice bounce here after this massive rally. Look at this. Let's see. Earnings looked good. Of course they do. It's JP Morgan, right? It's always going to look good. So, you know, we kind of had this huge volatility day on earnings. We sold off quite a bit, and then a lot of buying pressure here, pushing us up to, you know, right around this 159 level. And then we kind of rejected pretty hard off of that, as we had been in the past. And it looks like we're coming back. With this market, I wouldn't be surprised if this thing could continue to run. But this, just like Walmart is a knife catch, this is a chase. And I'm not talking about JP Morgan chase. I'm talking about we're chasing the stock price at this point. It would have been much more comfortable if this had sold off more on Thursday and Friday. Again, if you want to take a small, and I mean very small, speculative long play here to try and catch more on this rally, you could. I don't think there's a whole lot of movement here. I mean, all-time high looks to be right here around 173, and we ain't going to hit that anytime soon. I'll tell you that right now, unless something major happens. So, I mean, there's definitely been multiple hits here around 159. Yeah, I think it'll probably roll over as well if the market goes red. It does seem to be kind of following the market a bit here, because we had that sell-off day on Wednesday, you know, kind of a little bit of an up day on Thursday, and then Friday was a pretty big rally. So it definitely does seem to be following the market a bit, especially the last couple days. But yeah, if the market rolls over, I think this will be drugged down with it as well, to be honest with you. And so I would be kind of looking for that. You know, before I jumped in long on this one. But definitely a good name to keep an eye on. Walmart, an interesting one. You know, a lot of great questions tonight, guys. Really appreciate it as always. Thank you, everybody, for coming out to our live webinar. Again, if you got this on the replay and you haven't hit like and subscribe, you obviously don't want to know how the market's going to behave. So make sure you do that. Really want to have you guys on here and be part of the channel. And of course, if you aren't part of Elite, get on the waiting list. Link again is down in the description of the video. Thanks, everybody. Have a great rest of your weekend. We'll see you in the market on Monday.